Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoan here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. All right, Sandy, let's talk about this week's economic calendar and what it means for the housing market in Ontario and beyond.
Absolutely, Steve. This week is packed with significant updates that are highly relevant for the housing market. We're looking at new data releases and Bank of Canada speeches that could provide clues on the policy path ahead. It's a Thanksgiving-shortened week here in Canada, but that doesn't mean we won't have our share of important developments.
That's right. On Tuesday, October 14th, we'll see the release of Statistics Canada's August Building Permits Report. This is a vital indicator of how developers are planning for the future months, especially given the slight decline we saw in July. Developers have been leaning heavily on multi-unit projects due to affordability issues steering buyers away from single-family homes.
And later that day, Senior Deputy Governor Carolyn will be speaking at the BC Business Summit, focusing on productivity and competition. It'll be interesting to see if she touches on any housing-related topics, especially as affordability continues to be a pressing issue for many Canadians.
Wednesday, October 15th is another big day, with the release of the Canadian Real Estate Association's existing home sales for September. With sales on a 4-month winning streak, this will be crucial in understanding whether the momentum is continuing, particularly as borrowing costs ease.
Yeah, Steve. Existing home sales are a key barometer for the health of the resale market. The increase in listings and stabilization of prices across much of the country will also be something to watch closely.
Thursday, October 16th, will focus on the Canada Mortgage and Housing Corporation's housing starts data. After August's pullback to an annualized rate of 246,000 units, it'll be important to see if this marks the beginning of a slowdown or just a temporary pause in construction activity.
Plus, Governor Tiff Macklem's speech at the Peterson Institute for International Economics in Washington, D.C. could provide insights on Canada's trade position and financial stability outlook. Markets will be keenly watching for any hints about the Bank of Canada's next rate decision on October 29th.
Finally, on Friday, October 17th, we'll get a peek at U.S. housing indicators. The trends south of the border can often have ripple effects here in Canada, so it's worth paying attention to their data on housing starts and building permits.
Absolutely, Steve. It's a busy week for economic news, and all these pieces together will help shape our understanding of the current housing market dynamics and what we might expect in the near future. All right, Steve, let's shift gears and discuss the implications of the new tariffs imposed by President Donald Trump on Canadian lumber and furniture. These tariffs are already causing quite a stir in the Canadian mortgage industry.
Absolutely, Sandy. The new tariffs include a 10% increase on all imported softwood lumber and timber, and a significant 25% on kitchen cabinets, vanities, and certain upholstered furniture. These are substantial hikes that could rise even more in the new year.
That's right, Steve. The total import tax now on Canadian softwood lumber is over 45% when you combine these tariffs with the existing countervailing and anti-dumping duties. It's a heavy burden for Canadian producers who are already feeling the pinch.
And the impact on the housing sector is pretty significant. Higher material costs often translate to elevated home prices and renovation expenses. This could slow down new construction and dampen demand, which is the last thing we need given the current home building crisis in Canada.
Kevin Lee, the Chief Executive Officer of the Canadian Home Builders Association, even mentioned that the crisis might be worse than it appears. Housing starts are skewed by the construction of purpose-built rental accommodations, which doesn't necessarily address the broader housing needs.
That's a crucial point, Sandy. The Bank of Canada has also emphasized the importance of exports as a key factor in future rate decisions. With a 3% drop in export volumes in August, it's not a reassuring sign. If exports remain weak, there might be a push for rate cuts to stimulate growth.
Indeed, Steve. The tariffs are part of a broader protectionist trade policy from the Trump administration, which has previously affected other industries like steel and aluminum. Now, with wood products in the crosshairs, mortgage professionals will likely face higher costs, slower construction, and increased uncertainty.
According to the Canadian Chamber of Commerce, tariffs on foreign construction materials have already added about 6,000 United States dollars to the cost of building a single-family home in the United States since 2018, and it could rise by another 14,000 United States dollars by 2027 if these measures continue.
It's definitely a challenging landscape, Steve. The Canadian forest products sector has called these tariffs unjustified and highlighted the benefits that Canadian forest products bring to the United States. It seems like a counterproductive move that could have significant repercussions on both sides of the border.
Yes, Sandy, and with these tariffs increasing costs and creating uncertainty, it's crucial for mortgage professionals and the housing industry to stay informed and prepared for the potential impacts on their operations and the market overall.
Steve, let's dive into the latest study by Zoocasa, which highlights the financial challenges faced by renters in Toronto. It turns out that to afford a one-bedroom apartment in the city, you'd need to earn over double the minimum wage. That's quite a revelation.
Absolutely, Sandy. The report states that the average rent for a one-bedroom apartment in Toronto is around $2,295 per month. To comfortably afford this, a single person would need to earn about $44.13 per hour. That's significantly more than the current minimum wage of $17.60 per hour in Ontario.
It's a stark reminder of the affordability crisis we're facing. The gap between what's considered a living wage and the minimum wage is quite substantial. Even with recent increases in minimum wages across several provinces, rent continues to outpace income growth.
And it's not just Toronto, Sandy. The report also mentions that areas like Oakville and Mississauga require hourly wages of $42.81 and $41.12, respectively, to afford rent. Even Greater Sudbury isn't much better, with a living wage of $40.94 per hour.
That's right, Steve. And while rental prices have cooled slightly since the peak in 2023, the affordability issue persists. The challenge is particularly daunting for single earners. Plus, if we look at Vancouver, the situation is even more severe, with hourly wages needed in the upper $40 range.
The broader implications are concerning, too. The rising costs of rent and housing are not just an economic issue, but a societal one. When people are spending more than 30% of their income on housing, it limits their ability to save for the future or spend on other essentials.
And for those looking to purchase a home, the obstacles are even greater. According to recent analyses, you'd need an annual salary of over $200,000 to manage a typical mortgage in Toronto. This highlights the growing divide between incomes and housing costs.
Exactly, Sandy. While some suggest lowering housing prices as a solution, it's not that simple. Many landlords are barely breaking even or are facing losses. The risk of losing mom-and-pop landlords could lead to more corporate ownership, which has its own set of challenges.
It's a complex issue, Steve. The key takeaway here is the need for balanced solutions that consider the needs of both tenants and landlords. Addressing this affordability crisis requires a multifaceted approach involving policy changes, economic adjustments, and community support. All right, Steve, let's delve into some significant changes happening in the Toronto Regional Real Estate Board, or TRREB. They've recently replaced the board of their technology subsidiary, PropTex, and have announced plans for a governance and operational review.
That's right, Sandy. According to John Michel, the Chief Executive Officer of TRREB and PropTX Innovations Incorporated, this transition is aimed at ensuring that PropTX's governance structure is optimally aligned with emerging technologies and the needs of users. It's a move that underscores their commitment to supporting their mission and advancing their strategic planning.
The new interim board members include Agostino Monteleone, Daniel Steinfeld, Frank Verhangi, Colby Bain, Anna Michaelidis, and Paul Helps. These changes reflect a shift in focus towards long-term planning and ensuring that PropTX continues to deliver innovative products and services that nearly 90,000 realtors across Ontario rely on.
It's interesting to note that the former board members, who were in place as recently as the spring, included Paul Barron as chair, along with directors Jennifer Pierce, Mathieu Glaude, Irene Zaguskin, and Paula Morrison. This transition marks a significant change in leadership and direction for PropTex.
Indeed, Steve. Kevin Krieger, the Associate Chief Executive Officer of TRREB, is currently serving as the President of PropTex. He took on both roles last fall, and PropTex continues to operate as usual during this transitional phase. A permanent board will be appointed as part of the next phase of organizational planning.
This initiative seems designed to ensure that PropTex is well positioned for future challenges and opportunities, especially with the rapid evolution of technology in the real estate sector. It's about staying ahead of the curve and maintaining a competitive edge in delivering value to their users.
Absolutely, Steve. As the real estate landscape continues to evolve, it's crucial for organizations like TRREB to adapt and innovate. This governance review and the new board appointments are steps in that direction, aimed at strengthening their capacity to meet future demands.
Well, Sandy, it's clear that TRREB is taking proactive steps to ensure that PropTX remains a leader in providing essential services to realtors. It'll be interesting to see how these changes unfold and what impact they'll have on the broader real estate market in Ontario.
No doubt, Steve. We'll be keeping a close eye on these developments and how they shape the future of real estate technology in Ontario. Now, let's wrap up today's episode.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.